Ever felt like your investment strategy was more like a roller coaster designed by a caffeinated squirrel? You know, the kind that promises a smooth ride to riches, but leaves you clinging to the safety bar, wondering if you'll survive the next loop? We've all been there. Especially in the age of slick, automated investing platforms. Today, we're diving deep into one of those platforms, M1 Finance, and specifically, we're asking the question that doesn't get enough airtime: what are the disadvantages? See, it's easy to get swept up in the promises of automated investing, fractional shares, and commission-free trading. But what about the fine print? What about the potential pitfalls that aren't plastered on the homepage? That's exactly what we're going to unpack. Now, let's be clear. M1 Finance has its merits. It's a popular platform for a reason. Its PIE's concept, essentially, pre-built or customizable portfolios, is appealing to many. The ability to automatically rebalance and reinvest is undeniably convenient. But, like any tool, it has limitations. And understanding those limitations is crucial before you entrust your hard-earned money to it. So, let's get down to brass tacks. What are the disadvantages of M1 Finance? 1. Limited trading windows. This is arguably the most significant drawback for active traders. Unlike traditional brokerages that offer real-time trading, M1 Finance executes trades only during a single daily trading window. This window typically occurs in the morning, around market open. This means that if you see a sudden market movement and want to react immediately, you're out of luck. You have to wait until the next trading window. This constraint can be particularly frustrating during volatile market conditions. If you're trying to capitalize on a short-term opportunity or mitigate a potential loss, you're essentially handcuffed. This lack of flexibility can significantly impact your portfolio's performance, especially if you're an active trader or someone who likes to be nimble with their investments. Imagine this: a stock in your pie plummets due to breaking news. You want to sell immediately, but you can't. You have to wait until the next day. That delay could mean a significant loss. 2. Lack of advanced trading tools and research. M1 Finance is designed for long-term, passive investing. It's not geared towards sophisticated traders who need access to in-depth research, technical analysis tools, or complex order types. While it provides some basic information, it lacks the comprehensive resources found on platforms like thinkorswim or Active Trader Pro. If you rely on detailed charts, level 2 data, or advanced order types like trailing stops or conditional orders, you'll find M1 Finance severely lacking. It's simply not built for that level of engagement. This limitation can be a deal-breaker for experienced investors who rely on these tools to make informed decisions. If you're someone who likes to dive deep into the numbers and analyze market trends, you'll likely find M1 Finance's offerings insufficient. 3. Dependence on automated rebalancing. While automated rebalancing is a core feature of M1 Finance and a selling point for many, it can also be a disadvantage in certain situations. It's a double-edged sword. Rebalancing automatically adjusts your portfolio to maintain your desired asset allocation. This can be beneficial for staying disciplined and avoiding emotional trading decisions. However, it can also lead to unnecessary trading and potential tax implications. For example, if a particular asset in your pie experiences significant growth, M1 Finance will automatically sell some of it to rebalance your portfolio. This can trigger capital gains taxes, even if you don't want to sell. Furthermore, automated rebalancing doesn't always account for your individual circumstances or market conditions. It operates based on a preset algorithm, which may not be optimal in every scenario. 4. Limited investment options. While M1 Finance offers a wide range of stocks and ETFs, it doesn't provide access to all investment types. For example, it doesn't support options trading, futures, or forex. This limitation can restrict your ability to diversify your portfolio and implement more complex investment strategies. If you're interested in exploring alternative investments or hedging strategies, you'll need to look elsewhere. This can be a significant drawback for investors who want to explore a broader range of investment opportunities. 5. Customer service limitations. While M1 Finance offers customer support, some users have reported challenges in getting timely and effective assistance. This can be particularly frustrating when dealing with urgent issues or technical problems. In the age of instant communication, slow or unresponsive customer service can be a major source of frustration. While M1 has worked to improve this, some users still report longer wait times than expected. 6. Potential for over-automation. The ease of use and automation offered by M1 Finance can sometimes lead to over-automation. It's easy to set up a pie, automate your contributions, and then forget about it. However, this hands-off approach can be detrimental to your financial health if you're not paying attention to your portfolio and market conditions. Investing requires active engagement and monitoring. Simply setting it and forgetting it can lead to missed opportunities or unexpected losses. It's important to remember that while automation is helpful, it shouldn't replace your own financial literacy and vigilance. 7. M1 Plus subscription costs. While the basic M1 Finance platform is free, some advanced features, such as the borrowing feature, M1 Borrow, and the Smart Transfer feature, require a paid M1 Plus subscription. While the subscription fee is relatively low, it's an additional cost that you need to factor into your investment strategy. If you're a budget-conscious investor, you might find the subscription fee unnecessary, especially if you don't need the advanced features. It's important to weigh the benefits of M1 Plus against the cost to determine if it's worth it for your specific needs. 8. Potential for algorithmic bias. Like any automated system, M1 Finance's algorithms are based on predefined rules and data. This can potentially lead to algorithmic bias, where the system favors certain assets or strategies over others. While M1 Finance strives to provide unbiased recommendations, it's important to be aware of the potential for algorithmic bias and to do your own research before making investment decisions. This is a common concern with any automated investment platform, and it's essential to remain vigilant and informed. 9. Limited tax loss harvesting. While M1 Finance offers some tax loss harvesting capabilities, it's not as robust as what you might find on other platforms. This can limit your ability to minimize your tax burden. 10. Reliance on technology. As with any online platform, M1 Finance is reliant on technology. This means that you're vulnerable to technical glitches, outages, and cybersecurity risks. If the platform experiences a technical issue, you might not be able to access your account or execute trades. It's important to be aware of these risks and to take steps to protect your account. Remember, no investment platform is perfect. It's crucial to do your own research and choose a platform that aligns with your investment goals and risk tolerance. With that said, thanks for watching, and until next time.